Okay, good afternoon to each and every single individual. Hopefully, all of us are still doing good, and also those who will be watching this video, hopefully, all of you guys will be doing good. So, basically, the purpose of this video will just be looking at our depreciation and also the calculations of our depreciation. So, first thing is first thing, you should know the definition of depreciation or what is meant by depreciation. Surely you have been doing accounting, you've been seeing the word depreciation, and also you keep on wondering, "Gucci, what is a depreciation?" So what is a depreciation? Depreciation basically is the process whereby our asset loses its value. Let's make an example. Let's just say right now you bought a t-shirt, either at Mr. Price or at any other stores. So subsequently, when you wear it, your product or your t-shirt will lose its value. So that process in which our asset or our vehicles or our t-shirts or even our trousers, when it loses its value, in accounting, we use the term depreciation. So meaning for you to be able to calculate your depreciation, or depreciation deals with our assets. So let's look at our second slide there. Let's look at our second slide. So how do you actually calculate your depreciation effectively? The easiest methods in which I could motivate you guys to use is this one. For you to be able to calculate the depreciation, separate your items, separate your calculations there. Let's just say that you have to calculate the depreciation for vehicles. I want you to start by calculating the depreciation of the bought vehicle during the year. Bought basically is a new asset in which you bought during the year. Meaning can either it will be that vehicle in which you bought during your financial year. And secondly, the second step that I want you to do, calculate the depreciation of sold. What is sold? This is the depreciation of the assets or of the vehicle in which you will be selling during the year, or that you sold during the year. And lastly, um, conclude your calculations by all the remaining. What is all the remaining? All the remaining basically is an asset in which stayed in our business for a period of 12 months, meaning this one is untouched. We open our business with it and we close our business with it. That's how I want you all to calculate your depreciation. Start by bought, sold, and lastly, commence. Not commence, basically conclude with all the remaining. So maybe let's do a question paper. Maybe a question paper might be effective in this situation for us to be able to understand our depreciation. So let's look at that information. And remember, when it comes to depreciation, your financial year will be imperative. Remember that I said that you should segregate them, bought, sold, or remaining. One of the reasons in which I said you should segregate them. Bought, the financial years on not necessarily financial day, or should I say financial day, but then rather the months in which you use them during the year will not be the same. But you might use it for a period of maybe less than a year, and even small might be less than a year. But then when it comes to all the remaining, it's always 12 over 12. I know that it might be a little bit complex, but then I think for us to effectively understand it, we should look at our information. So information there, readjustment trial balance of P on the 28th of February 2018. So you have equipment, which is 290,890. They give you a cost price, and also they give you a cost price of your vehicle, which is 449,425. And they give you their respective accumulated depreciation, both of them there. So let's look at our adjustment. But then we'll just be focusing on the adjustment of depreciation. So it's adjustment number 6 there. They say that provide for depreciation on vehicles at 20% per annum on the cost price method. And on equipment, we highlight it at 15% according to the diminishing balance method. Remember that for depreciation, we have two methods. We have the cost price method and also we have the diminishing balance method. So what is the cost price method? Cost price method basically, when we calculate depreciation using the cost price method, it simply means that for us to be able to calculate the depreciation for what? For an asset, we are supposed to use that cost price of an asset. According to the cost price method, for us to be able to calculate our depreciation, we'll just be using the cost price of our asset. And then the second method that we have the diminishing balance method. Unlike cost price method, where we have to use our cost price method, here in a diminishing balance method, another word for diminishing may be carrying value method. So meaning for us to be able to calculate the depreciation according to the diminishing balance method, we are supposed to use the carrying value of our asset. How do we get the carrying value of our asset? We get our carrying value of an asset by saying cost price, or cost price of an asset minus accumulated depreciation. So when you say cost price of an asset minus accumulated depreciation, we'll get the carrying value of an asset. Meaning this carrying value is the value in which we'll use to calculate our depreciation. Depreciation. So let's proceed with our thing there. They say that in brackets there, take into account that the vehicle with a gross carrying value of 150,000 rand. Gross carrying value basically is a cost price. With a gross carrying value of 150,000 rand was sold for 91,000 rand. The cost price of that vehicle was 150,000 rand. Did they specify it? When did we sell it? They didn't. The accumulated depreciation until the date of sale was 71,465. All right. Okay, let's look at our calculations there. So for your vehicle, for vehicles and also, pardon me, for equipment, they do not specify whether we bought or sold. So therefore, you cannot assume that we sold during the year. Let me confirm this under calculations. What are you supposed to do in this question? Okay, so let's calculate the depreciation there. So for our thing there, they did not specify did they specify when did we sell our asset? Okay, let us read our transaction yet again. We can start there in the middle. They say that take into account that the vehicle with a gross carrying value of 150,000 rand was sold for 91,000 rand. But then they did not specify when did we actually sell it. The accumulated depreciation until the date of sale um was 71,465. Let's start by calculating the depreciation of what? You can start by calculating the depreciation of equipment. Let's start with our equipment. Let's add a new slide. So we'll write equipment here. Pardon my grammar there. Remember that I said that for you to be able to calculate your depreciation, you should what? You should start by calculating the depreciation of what? Of sold, of bought. Say bought. I said what is bought? Bought is the depreciation of the asset in which you bought during the year. For equipment, let's look at our transaction yet again. For equipment, they do not specify whether we bought or sold, meaning we did not either buy our equipment or sold it, meaning the depreciation of bought will be zero. Why the depreciation of bought is zero? Because we did not buy any equipment during the year. Second step, sold. Did we sell any equipment during the year? Still, we did not sell any equipment during the year. So depreciation of what or sold will be zero. And lastly, old or remaining. Old or remaining. Old or remaining, the asset in which you used for the period of 12 months. So for us to be able to calculate old or remaining, we'll use the cost price that they gave us there in our trial balance for equipment. Let's look at our cost price. Let's scroll up. So the cost price of our equipment was 298,890. So which method? Remember, the method of depreciation is critical. The method of depreciation is critical. Let's go back to our adjustment. They say that and on equipment, we use the diminishing balance method, meaning for you to be able to calculate the depreciation of what of your equipment for all the remaining, you will say the cost price of your equipment minus what? Minus the accumulated depreciation. Therefore, we get the carrying value. Mean that carrying value is the one that will multiply by 15% and multiply by 12 over 12. Already we have our cost price. Already we have our cost price. They specify them. Our cost price was 298,890. So we'll write it all the remaining in brackets. And then let's look for accumulated depreciation on equipment. It was 126 and 96. Minus it here. Minus. And then remember, which rate are we using? 15%. We'll say multiply by 15 over 100. All the remaining, I said that it's always 12 months. Therefore, multiply by 12 divided by 12. Let's multiply it. Also pause the video a little bit and calculate it. Remember, even though we do it virtually, also calculate it by yourself. Says so. Say 298,890 minus 126 and 96. You'll get a carrying value which will multiply by 15%, multiply by 12 over 12. Hopefully you got it. So when you say 298,890 minus 126,096, you'll get 172,000. Let me write it so that you understand where I get the value. You'll get an amount of 172,794. That will be your carrying value. And you should multiply by what? By 15%. Multiply by 15 over 100. All the remaining is always 12 over 12 since we use our asset for a period of 12 months. Multiply it also for you to be able to get a depreciation. And then a depreciation will get an amount of 2,591. So that will be a depreciation for all the remaining. So for us to get the total depreciation for equipment, we'll say 0 plus 0 plus 2,591. Therefore, the total depreciation for equipment is basically 2,591. And this is how we calculate our depreciation. And also for what? And also for vehicles, we'll do the very same thing in which we did here. We'll write vehicle. Write what? Bought. Bought is the depreciation of the vehicle that you bought during the year. But then remember, for a vehicle, we did not buy, but then rather we sold our vehicle during the year. Let's go back to our statement. They say that take note into account that the vehicle with a gross carrying value of 150,000 rand was sold. Therefore, we only sold. We only sold. There was no acquisition. So for bought, the depreciation of bought will be 0. Right is equals to 0. Second step, sold. Second step, you write sold there. Sold, you calculate the depreciation of that asset in which you sold during the year. So remember in our statement, they said take note that a vehicle with a gross carrying value of 150,000 rand was sold. So during the year, we sold an asset with a cost price of 150,000 rand. But then they did not did they specify when did we actually dispose it? The transaction was vague. Maybe the examiner might have made a mistake there because they did not specify when did we actually dispose our asset. So let's make an assumption, say that we sold our asset in December. Let's make an example that um, we sold our vehicle in December. Therefore, for sale, for us to calculate the depreciation of sold, how are you going to do it? Remember, use the cost price method. With 150,000, let's calculate it. 150,000 rand multiply by 20%. 2,100 multiply by the months in which you use the asset for. So remember that in our example, we said that we sold it in December. So your financial year will play a critical part here. So in our financial year ends in February, meaning now we started to use our vehicle from the 1st of March up until December, in which it is 10 months. Therefore, we say multiply by the months in which you used your asset for. We use it for 10 over 12. And then we'll get a depreciation for sold. So let's include it in our calculator. Say 150,000 multiply by 20%, multiply by 10 over 12. And then we'll get 25,000 rand. So 25,000 rand, the depreciation of what? Of sold. And then we go to old or remaining. This old or remaining, remember, this is the asset in which you use for a period of 12 months without being touched. Meaning this ones we open our business with and we close our business with. So in our transaction, they say that take into account that we sold an asset. So subsequently, when you sold your asset, simply means that your asset are supposed to decrease. So meaning our vehicles, the cost price of our vehicles are supposed to decrease by 150,000 rand since we sold. Therefore, we'll go to the cost price of your vehicle. Let's go to it. Our cost price of our vehicle at the commencement of the year was 449,425. For all the remaining, we'll say 449, 449, 449,425. That is the total vehicles in which we had on the commencement of our year. We open our year with 449,425 vehicles, but then we sold 150,000 vehicles. Therefore, our vehicles are supposed to decrease by 150,000 rand. Therefore, we say 449,425, 449,425 minus 150,000 rand. And then we'll get 299,425. So 299,425, this is the cost price of your old or remaining. So let's proceed with the depreciation calculation. We'll say 299,425 multiply by our rate, which is 20%, multiply by the months in which you used our asset for. Remember, it's all remaining, so it will be 12 over 12. And then you will get your depreciation for what? For sold. So let's calculate it. Including your calculator, you can pause a little bit. You can pause your video for a minute and say 299,425 multiply by 20%, multiply by 12 over 12. And then you will get your depreciation there, in which is 59,885. That is your depreciation for all the remaining. And then the last step, add the total depreciation. For sold, it was 0. You say 0 plus sold in 5,000 plus all the remaining, which is 59,885. So let's add them. So when you add them, you'll get an amount of 84,885. Therefore, the total depreciation for vehicle will be that value in which it is 84,885. So this is basically how we calculate your depreciation. So for you to be effectively or to master your depreciation, please try to segregate your items there. Calculate the one for bought, sold, all remaining. Calculate them separately since they have different financial layers or usage. Let me rather say usage. For bought, you might use it for less than 12 months, and also for sold, you might use it for less than 12 months. So try to segregate them for you to be able to calculate it effectively. Other than that, hopefully this video was useful to you guys. Thank you.